Okay, so before we dive into the 350 pip trade, I think it's important to give you a perspective of how I'm looking at the market, my observations, and how always keeping the big picture in mind will set the tone for every single trade that you take. And those big ones that come along, like this one, that don't come along every day, but if you have the awareness that the market runs in cycles and how those cycles perform, trades like that could definitely be achieved, not all the time, but on a consistent basis because you have that awareness, right? So what we're looking at here is a complete market cycle of contraction, expansion, mitigation, and trend with a break of structure, right? This happens on a minute scale and it happens on larger scales. So it's something that you need to take into your awareness, because on the larger scale, there could be a much larger cycle playing out, which you're unaware of because you're too zoomed in to the smaller cycles, right? Especially depending on what time frame you're trading. So I'm trading the M15, so I'm pretty zoomed in all the time. So it's so important that you zoom out to get that big picture perspective. So let's just go to the next image to demonstrate these smaller cycles within a larger cycle. All right, so this is it right here. So let's just draw this out. Let's make sure this is so we've got a range, and then we've got expansion, and this expansion continues. And this is where potentially people could get caught up, because now you can see this huge trending phase. So you begin to believe that the market is going to continue going in that direction. But what you've missed is the larger market cycle. You've got this contraction over here that the market has just moved into, and that sends the price tumbling to the downside, all while you're thinking, how the hell has this happened? Because you've potentially been too zoomed in into price and haven't got that big picture perspective. And this is how I was able to achieve this 350 pip trade. Well, I think it was together 480 pips because I took two positions on gold. So let's just quickly dive into that and see how that played out. All right. So here we are on gold, and again, you can see these smaller cycles. This was a loss. This was a nice win. This was a nice win. You can see the smaller cycles playing out over the larger time frame cycle, right? But if you weren't aware of this contraction area, then you would have missed the larger time frame cycle. So let's just wrap a range around this. And you can see that this is a huge contraction area, right? And we have to understand that these contraction areas, the market and price always comes back to it. Always. It's just the nature of the market. This is something that can't not happen. It has to happen. It's just a matter of when, right? So it's about being patient and waiting for the price to come back to your POI, right? And as you can see, these smaller cycles played out, but this is a contraction, expansion, mitigation, and then trend. And I was waiting for this. I think this contraction formed and it expanded out of here on the 29th of May and then came back in on last Friday, which was the 31st of May. And we had some massive news events, and the news moved this into our area of supply, right? We had this contraction expansion down here, which I was actually looking to go long in, but because I was aware of this potential short here, I did not take this trade. We can see when the market came back down, how it pushed back out, retraced, and then pushed back through. Now, this particular trade, because I was aware that news is coming out, and sometimes we don't get to play that M2 event break because price just moves too quickly. It came into this area of supply and it popped perfectly. But then not only that, I managed to actually go down to the M2 and play the event break. So as we can see here, take that off. We can see here we've got a bullish engulfing structure that defines an area where we have to break through, right? But you can't just break through it. There needs to be some form of resistance at that area for us to know that that is a definitive spot that we need to be aware of, that price is broken through, and then look for the opposite structure to then trade through that again. So we can see that it hit this area of supply. We can see that this bullish engulfing structure is the last bullish engulfing structure that is there before it hit that area of supply. And we can see the resistance that the market took to actually push through that. And then when it pushed through that, we went back to the birth of the zone. This is probably another video that I'm going to have to go back through again, but I'm still testing it out with gold, whether the birth of the zone is the zone that we're actually going to take or the origin of the zone that broke it. This would be the birth of the move that broke it. This would be the origin of the zone that broke it, right? So it went back to the birth of the zone, touched it perfectly. And this was a 180 pip trade with a 14 pip stop loss. Let's just zoom out again. And this trade was a 15 pip stop with a 350 pip win. So just keep in mind when you're playing these smaller cycles that a larger time frame cycle could be playing out within, obviously, as the larger cycle could be playing out, which you're unaware of because you're too zoomed in. Make sure that you look at the big picture, and I'll see you in the next video.